Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so we're going to go over the markets. We'll start with the dollar as always. If you are looking at the chart, then you see there's a lot of doodles on here. A lot of these doodles were added on during the market overview. That is a live stream I do pretty much every weekend in the Discord. So if you're not in the Discord, make sure you are. That way you can hop on in during our live streams and also get to interact with me and other people. All right, so starting off with the dollar here, what do we see so far? It is following generally this doodle. Now I'm going to actually take this away so we can see a little bit more clearly. So I have been looking for it to make it back up into this bearish fair value gap zone that has been filled. But if you look left, you can see price interaction has not waned at all. Okay, so a lot of times with fair value gaps, because they turn into pivots, because price goes into those areas, then fails or holds them as support, resistance, supply, demand, etc., you'll find that they hold out at significant levels even after the fair value gaps have been filled. So it's very powerful to have these on your charts. You see I have circled here these equal highs, so there's going to be a lot of buy side liquidity there to be taken. So we are looking for more upside into the dollar, and then we want to see as we come and take that liquidity and we start tapping into this daily downtrend line. Okay, that's when we want to see a failure to occur, and then a short-term bullish pullback potentially to where we had a higher low right here on this area here around 102.2526, or we go even lower going after these low wicks here and tapping back into the monthly bullish fair value gap towards the top of it and going back towards about 101.25. Either or, we're likely to see a higher low form in this general zone, and once that occurs, the probabilities increase quite high that we do break through this daily downtrend line, that track ends, and then we go back up into this monthly bearish fair value gap, and we go back towards the 106, the 107, and potentially, yes, even back to 108 to really test out this monthly bearish fair value gap, come back to this rising trend line and test that out as moving resistance. So we have some potential upside in the future. However, in the midterm, short to midterm, I'm looking for a lower high from these highs here, snatch liquidity from these equal highs here, and then looking for a higher low to then lead to a higher high. So I am ultimately more bullish on dollar than bearish, but I do still see the opportunity for short-term bearishness on the dollar as we go back down to make a potential higher low, if I am wrong. So this is the most probable track, I'm saying, to the upside. But if I'm wrong, and that's definitely possibly the case, what we'll look for on the downside is a move back down to this circled monthly bullish fair value gap, back down towards 98 to potentially even sub 98, going back down to under these lows here, under the sell side liquidity right here at about 97.5, 97.6. Okay, so we are looking good on dollar, and I'm looking for more bullishness and risk on assets here in the short term. But once we show signs of making a higher low pivot on the dollar, watch out, we may get some selling in the markets. Okay, now let's take a look at the Dow. So let's take a quick look at the US markets, starting off with the Dow, also following the doodle so far. So came into this general demand zone. All right, didn't go all the way up into this very, very small fair value gap right here, and this is also major buy side liquidity at this red line here, that upper pivot. So we've yet to actually make our way up there. Now, my doodle here is under the assumption that our main line on the dollar plays out, where we make that lower high pivot, we take the buy side liquidity, and then we break down again, make that higher low pivot. So in the process of making that higher low pivot, I'm seeing us pop up here on the Dow, and then as that higher low pivot confirms potentially and starts to validate going up, then we see the Dow break down. So pretty much creating a swing failure pattern here, taking liquidity above these highs, grabbing liquidity above that pivot high, the red line there at 35,866, and maybe even tapping that very, very small fair value gap, and then breaking lower and going after these equal lows at about 33,600, and then we'll have to wait and see how the markets develop from there. I think a lot of fundamental changes may be happening at that time. Maybe we'll get more information from the Fed, etc. Maybe they're going to be thinking about slowing down, all these things. Okay, so we'll wait and see as we're potentially breaking down the stance of the Fed, CPI, PPI, inflation, etc. But overall, this is the most likely track I'm seeing. Now, let's just say next month, let's say this is a very dead month, which it definitely could be. So let's say next month, going September, we get more details out of the Fed, and there's more implications that, hey, we're not going to raise rates anymore. We're actually going to pause, or God forbid, we're going to start to ease. Okay, so if they start saying the word ease, then, probably scratch this idea and look for these highs to get taken. And if that's the case, then we might be looking at another leg to this rally, okay, which would definitely put in question, are we going to take out the all-time high? So that's why I don't consider that possibility to be very likely. Okay, it's definitely a possibility. There's probabilities towards that direction, but the most likely outcome, in my opinion, as of now, is something like this, where we're going to make maybe a slight higher high from this high here, and then ultimately break down further and take out these lows, and maybe even go down towards these lows and kind of fill out the liquidity all throughout this area, and maybe even tap even lower back towards these low pivots here. Okay, so ultimately I think we're going to be in kind of for a boring couple of weeks, but eventually we'll see some short-term upside and then some continuation to the downside. All right, next is the S&P, and like I mentioned in the Discord, I actually did a session where I was just building out a chart. I did a couple of charts. One of them here is the S&P, because I unfortunately accidentally deleted all my stuff, so I decided, I'll just rebuild this chart, and here is kind of a much cleaner look, and I feel very similar to the S&P than I do to the Dow. Essentially, they all move virtually the same, just with slight deviations for the most part. Again, NASDAQ might be a bit of an exception. We'll get to that. But looking at the S&P, what have we done? Came back into this liquidity, into this daily bullish fair value gap zone, and then likely going to make our way back up to that 1 week bearish order block, and probably over the next couple of days kind of fail in here and then look for continuation lower. So unlike the Dow, I'm not really looking for like a swing failure pattern here where these highs get taken out. I'm more eyeing a possibility of where we just make a lower high and then lead towards these lows. So ultimately go back to take this pivot here and then this pivot here, and then this goes back into this monthly bullish fair value gap here, and kind of trade in there for a quite significant amount of time. Okay, so I am looking for that to take place. I do think we're going to likely see some more upside throughout the rest of this month. Maybe as we get closer towards the end of the month, that's when we'll maybe see some weakening out. But in the end, this is the general idea that I'm kind of going forward with. But always, like I always say, you stay nimble. We're doomed to be wrong. It's an inevitable outcome. You're always going to be wrong. What is most important is not being right. It's being nimble enough to adapt when you're wrong. Okay, so we got to stay nimble. So even though this is the most probable path in my view, it may not be this tomorrow. All right. Next is the NASDAQ. So let's take a quick look at the NASDAQ, which has been an absolute tear. As you can see, it's a lot less clean. I promise I will be cleaning up the Dow and NASDAQ charts, just like the S&P. So, they'll start to look better as more recaps come out. But as you can see with the doodle, I do want to keep these doodles on here so you can kind of get an idea of what I'm thinking. Very similar, making our way up, coming back into this consolidation here. Now, this fair value gap that's been filled is a bullish one right here. What I think I want to keep it on there for now, just to show you that, hey, because there's been price interaction here, you're always, or for a very long time, you're going to see that this zone here is going to play with some sort of price interaction, okay, even going forward. Even though the liquidity here got filled, you'll see price interaction. And then also on top of that, you see this bearish 1 day fair value gap right here that also was created. Let me actually make that a little bit cleaner right there. There we go, perfectly. So it's kind of overlapping. Again, all of this confluence kind of meshes with each other, and you'll see price interaction most of the time from these sort of levels. So we'll likely see price get back into these fair value gaps, then over time show signs of weakening out, kind of like I'm eyeing with the S&P, and then lead to that lower high to then go back down, ultimately, I do think the Nasdaq has a lot more room to the downside, generally because of how aggressive, how violent this move up has been relative to the Dow and the S&P. So we'll be looking for this to go significantly lower, okay? And when I say lower, guys, I'm not calling for the top of this rally. I don't know. I don't know if this is a bull market or a bear market. It doesn't really matter. But what I do know is that markets move in ebbs and flows. And if this ends up being the lower high of this, macro market where this is like a bear market rally, then so be it. But the point is, this is where it looks like it's happening. Now, if this is the case, we'll be looking for the orange zone here. If I see signs that, hey, we're going to make a higher low pivot for maybe these pivots down here, or these pivots down here, or even these pivots down here, like maybe we came down to this area, or even this area, or even this area, and we're showing bullish signs, well, guess what? We're going to start to flip bullish, right? So that's all we need to really think about. You don't really need to think too far into the future. Kind of take in what the chart is telling you, observe what the markets are showing you in this time, and most of the time you'll find that you're on the general right side, and just make sure you have your risk under control, so when you are wrong, and it is inevitable to be wrong, that you don't destroy yourself and you can stay in the game. Okay, you gotta stay in the game. All right, the job is not to make money, the job is to survive, and then the money is a symptom of surviving. Okay, as long as you have good risk management, a decent strategy, you will find that money will come your way, and good things happen. All right, so we'll be seeing more upside in the short term, and then likely continuation lower into the orange zone. So that's about 14,300, 14,400, and then even potentially sub 14,000 as we get towards the low end of this orange zone, or back down towards this consolidation here and these higher pivots. So that's around 13,005, 13,002. Okay, once we get there, though, I do think it's really likely we're going to see some demand start hitting the markets, mainly because we do have a bullish fair value gap right here, and we also have these lows. So I would really love to see these lows down here start to get taken out. These equal lows are nearly equal lows, so these pivots down here at about 12.8, which coincides with this green zone, which is a previous past demand zone. So this is going to be a very interesting area as price comes in, and I do think generally you'll probably see price hold. Now, will the holding be a higher low pivot that leads to new highs? That remains to be seen, but we could at the very least see a slowdown in the selling should we get down here. Okay, so we'll keep our eye on the Nasdaq, and again, just be adaptive, be nimble as the markets develop. All right, let's go over to oil. See how oil's developing. Now, if you've been following me for any time, I've been like a broken record about how bullish I am on oil. I've been bullish on it for pretty much all of this year, and pretty much at the end of last year as well. You got to be bullish on oil. It's a very, very bullish chart, at least in my opinion. We'll see if I'm proven right. So far, I think I've been on the right side, right? We had a huge accumulation down here. I think this was very bullish in my opinion. I think this was smart money accumulating this level. Again, this blue zone here, very, very large blue zone, actually goes back about 5 to 7 years. It was a major supply zone in the past, but since price broke through it back here in 2022, it's become a major demand zone, and we have proof of this now. It's validated because of this activity, and now we're potentially showing signs of finally getting out. We've gone after this pivot. We took the highs here. So if we follow this doodle I have here where we make the higher low, whether it's above the blue zone here or back into it, something like this, as long as these lows here are protected, then we're going to be looking at not just this higher high here. We are likely going to see a move significantly higher, going to plus 100, plus 110. Okay, so pretty much back up towards these pivots up here. So oil needs to be seriously watched on your watch list if you aren't. This is a chart that affects almost everyone's daily life more than almost every other chart. It is what it's pretty much showing you that your cost of living for goods is likely going up or down. So you definitely want to watch this. I think it's a very, very good chart to watch, just for your everyday life, to be honest. Now, let's say I'm wrong. Let's say this does break down, and like I always say, I'm going to give you multiple paths, but I do mark out which is the most likely path, and for me, it's upside. But let's say I'm wrong, okay? Let's say this is just a huge range, right? And that could be the case, right? So this is the tops of the range here, and then this is the lows of the range down here. So let's say that's the case. Well, if that's the case, then expect some major downside. That's going to come all the way down over time back to here and then potentially hold this level. But in my opinion, that's not really that likely. Okay, it's not that likely. I see some fundamental changes in the world that is pushing oil up. Obviously, exports being cut more and more and more out of Saudi Arabia, and then obviously demand is going to be increasing as we get into potentially the colder months. And again, the war, unfortunately, it keeps on going. So all these things kind of build on oil on a fundamental level, and then just technically, it just looks good, right? Technically, it just looks good, and I do think that oil is overall bullish, especially when you pull out going into like the monthly and the weekly time frames, because let's take a look at this, take it off log. Look at this, okay? So you may not be a big fan of patterns, which is totally fine, but look at this as not as a pattern, but more as this was bear market, okay? This was a bear time in oil. That is over, okay? That is over. That cycle is done. And I don't care who says it. They're wrong if they think that this doesn't matter. This completely matters, okay? This is done. And this chart does not imply that it's somehow going to break all the way down here. Now, it could. Obviously, we see oil went all the way down to zero, but we have to trade and base our evidence off of probabilities and what we're seeing, okay? That's what we need to do. And what we see here is major upside is brewing here. Look at this monthly chart, okay? We broke through this blue zone, which I said has been a major level all the way back here in 2006 to pretty much now, came back, broke through it, and then came back and held this level for months. And finally now, after a higher low monthly pivot, okay, equal lows here, higher lows from this pivot here and this pivot here, we are now seeing signs that we are going to continue higher and at the very least come up towards about $100 a barrel, and then potentially significantly higher, potentially continuation beyond this pivot up here. So keep your eye on oil. I know I'm a broken record, but I cannot stress enough how important this chart is. If you're in the Lemon Garden Swing Trade Service, you know we have a long on it. We are long USO. If you're not long on it, that's okay. You may get another opportunity to kind of build off a long, potentially, if you believe it's going to go up as well off of this potential pullback that's coming. And if you think I'm wrong, you might find yourself in a good position to short, because we are likely going to break down here in the short term. But over the next coming weeks, look for a higher low pivot over the daily chart, and then look for significant more upside, at least back to 100. Okay, let's look at gold and silver next. And gold and silver has been pretty interesting, especially gold. So gold, if you've been following my recaps, I've had kind of two tracks, but the main track I've said that I think that gold is likely in is a bearish track in the short term. I think it's very bullish in the long term here, mid to long term, but in the short term I have been looking at it in a more bearish view. So pretty much what I was looking for is, as we broke down, right, so we had a major move up, beautiful move up, and finally we've shown exhaustion. We've had a market structure shift where we've taken out these lows and we're finally making lower highs. I had been looking, as we came into the top side of this liquid zone, to kind of do something like this and kind of grind up, making a bearish structure. Now, if you see price, that's actually not what's happening, right? So what is happening here might change my view. And what I'm talking about is we are attacking these lows now. Now we haven't taken out this low here, so what will change my view is if something like this happens instead, where we actually break lower, then come up, and then make pretty much like another lower high and break lower again. And what will happen is we'll start going into like this grinding sort of structure where we're tightening out, squeezing into a major demand zone, which will be these fair value gaps, this imbalance, and potentially even towards these low pivots going back towards like 1805, maybe even slightly stabbing through and coming right back up, stuff like this. And if this occurs, I'm not going to be looking for my main track, right? My main track has always been, especially I'll just redraw it in case you haven't been following me, has been something like this, where we have a rising structure which has a more bear bias to it, breaks down, okay, comes into these areas down here, and then does it again. And then we ultimately make our way back down to these levels here, going after liquidity under here, and potentially even the liquidity down here at 1750. And then from down here, we see a macro higher low, that will then eventually over next year lead to, you know, new levels up, new highs up. But if that's not what's being built, and we're potentially building out a squeezing structure that has a more bullish bias up here, then by the end of this year, we may actually see gold really going after its all-time highs here. And this will be very bullish, and this would imply that the dollar is not going to get as strong as I'm thinking, or at least it's going to move significantly slower, right? It won't be rapid. So we'll definitely keep our eye on this, because this is giving us some mixed signals, and this is why I love charting, because, you know, it's kind of like playing detective. You kind of have to let the story get written as the candles come in, and then this is, again, you have to be nimble enough to adapt to the story. So I'm looking at both tracks. The probabilities are decreasing quite a bit of a bearish rising structure. If this low gets taken out, then we can consider that is not likely what's happening. And then the main line, the main track we'll be following is something like this more so. Okay. Again, I'll be doing the recaps regularly like I usually do. So we'll keep it going. Next is silver. So silver, a little bit less clear than gold. So silver had a really strong rally here, kind of on its own, as kind of gold was having a slight uptick. But that also makes sense because silver has also been a lot more stunted overall compared to gold on its rise. But as you can see, you know, silver is in a more, I would say, bearish structure. And what I mean by that is it has a bit more of an advanced sort of like distribution structure being built here. I would not be surprised. I am looking for upside coming here, just like with gold. So I am looking for short-term upside. Even if gold does take out that lower pivot, once that happens, I would be looking for upside kind of like this. So same thing with silver, whether it's here or slightly lower, and then slightly after we, you know, break up, I would slightly look for a move going towards about like 22.8, 23.8, maybe even all the way back towards like 24.2. But I do think that the probabilities are pretty good that we don't take out this high if we're going to stay relatively bearish for the next couple of months or so, and then look for lower levels going back down to like 21.3, really back under these low pivots here and back towards this imbalance and that low pivot down here ultimately. So I have a similar view to silver that I do gold, but gold has, at least in my opinion, a little bit of a cleaner setup. Silver is a little bit more wonky. And usually when that happens, there's like some sort of you know, distribution kind of effect happening here. So we'll keep our eye on it. We'll keep our eye on it. But I am looking for potentially a move upwards here, short term, and then continuation lower. All right. Let's finish it off by looking at Bitcoin. So we'll look at Bitcoin. See how. Actually, we'll use the swing trade chart I have here. Where is Bitcoin? Here's Bitcoin. So let's see how this is developing. So Bitcoin's been having an interesting day. So interestingly, you know, it actually had a pretty nice move up earlier in the day, and then a really nice slap down later today. Came pretty low, and now it's being bought back up. So that's about an hour and a half before this daily candle closes. And notice what it's doing here. It's very similar to what we're seeing here. Nearly identical, just smaller, just much smaller. So if we're going to have the same result from this this consolidation, then we'll likely see a nice little pop up here. But because it's so much smaller, you may not, you know, it may be wrong to expect, you know, this sort of move. You may get like one candle that's a bit big, or you might get two candles that, you know, are about like the size of like 1.5 of these or something. So it won't be the same, but I am looking for a move back towards 32, 33, 34, 35. So the mid 30s, low to mid 30s looks pretty good. This high looks good to get taken out. This squeezing structure is getting pretty advanced, getting pretty mature. So we could argue that we might have begun, right? We might have begun the breakout of this. Okay, it's not time yet to be sure, but we may have begun. If you can see the chart, you know I am long. The lemon garden's been long for quite some time. We're long on pretty much everything. And you know, main reason is because, well, the chart tells me to. You know, it doesn't look like I should have been short, and I believe even now, even though it's come back just a bit, it's the same thing. You know, it looks like we should be long. So if I was looking at this chart bare, I didn't have a position, I would be looking probably for an entry to go long. This looks like it wants to break up higher, maybe not significantly higher, but you know, higher. And like I said, you know, 32,000 looks pretty decent. Maybe even 30, 30 plus thousand, just depends on how aggressive this will get. But overall, looks pretty decent. Looks pretty decent. I do think that once we get towards this bearish monthly fair value gap area, that this is where we can start to look for significant failures on Bitcoin. And I would look for something like this to potentially occur, where you break lower and then you actually finally start to threaten this low pivot down here, because this is going to be attractive. This low pivot down here, this whole imbalance down here is going to be quite attractive on Bitcoin. All right, so I do eventually see this being targeted. Normally, when you have price action like this, a little too aggressive there, like this, you don't really tend to see this hold. And what I mean by that is, this is bullish. There's nothing like overly bearish about this. It's just normally when you finally get the cool off effect, that these stair steps, okay, because these are like staircases here, they essentially usually get sold down into, and then you tend to try and look for a higher low, right? So a macro higher low, if it's going to be a bullish continuation of any sort, right? So if this is not like a one-off, bear market rally or something, you're going to look for not any of these lows to hold, but really this one, the base down here at about the 15,000 or so, right? This is what we want to see hold. And if that holds, then we're looking over next year. We're looking over next year to a significant rally up. Not calling for all-time highs or anything like that, but just continuation, very similar to how it was back from 2017 and then into 2019, right? So 2017, we had that rally to 20K. Then we dumped all the way down to 3,000 or so, and then 2019, I think we dumped in 2018, and then pretty much from 2019 we rallied all the way up, and then we stalled out, started to sell down. Then COVID actually ended up hitting, which shot us all the way down to about like 4,000, 4,300. So we made a slight higher low from that cycle low in 2017, and then obviously after that 2020. It just rallied all the way up to the the 60s here. So I'm kind of seeing a similar setup here, and that was over a 2-year period, right? So 2017 pretty much went down for most of the end 2017 going into 2018, and then 2019 until like spring it went up. Well, same here, right? We broke down here all throughout late 2021, and then all throughout 2022, and then finally in 2023 we started to rally up. So we might get a similar kind of time setup where it's like about a year and a half, 2 years of down, and then after that you finally bottom out, and then over the next 6 to 14 months you start the next rally, right? So that could be the case. But point is, at this moment, like, I don't see any reason to get overly negative. I don't see anything that's telling me to get super bearish. It's kind of the opposite, actually. When you have a big move up and then you have a grinding behavior that has a tilt downward, there's a bull bias built into that. Okay, it's not perfect. Nothing's perfect in trading. But you see this, like this is it's repeated over and over and over. So I challenge you to go back into the charts of any asset and look for this, and you'll start to see that this behavior repeats itself all the time. And it's the same thing to the downside, right? Like I always say, if you followed me for any time, if you see something move down hard and then kind of grind up like this, that has a bear bias built in. Okay, and same thing to the downside as well. So if you're actually seeing something like this break down, and then you see this behavior where it's grinding lower, that has a bull bias built in. All right, and then if you're going up and you see something like this where it's kind of grinding higher like that, that has a bear bias. All right, and then if you're going up and then you see something grinding lower like this, it has a bull bias. Now, like I said, it's not perfect. But the point is, it's not to play this perfectly, it's to get the bias. And if you start to see that get validated, well, you've made your job a lot easier. You can get an idea of that, okay, I should be trying to hop in where it's smart to do so in this direction. That's all you need to do. Okay? So yeah, with Bitcoin, looks great. Let's take a quick look at MATIC as well, because this is a free trade for the Discord. So if you're in the Discord and you're not a premium member, I do provide about 1 to 2 free trades a month. So like 1 crypto trade a month, and maybe I'll do a stock here as well. I can't promise it's gonna be every month, because I will not trade if the market doesn't really give me an opportunity. But here's MATIC. So this is one of the free trades that we did. And so far, it's slightly in drawdown, but I'm liking what I'm seeing. So our previous trade, we bought somewhere around down here. Again, I don't remember everything. Sorry, I look at so many charts. I'd have to go back in the records, but it's around down here. And then we end up selling just around over here. And I'm seeing a potential chance to double dip on MATIC. So we're getting this bottoming structure, this higher low structure, an Adam and Eve, as they say, right? So you break down heavy, and then you have your Adam, okay, and then you have your Eve, right? And I'm seeing this potentially coming into fruition. We just have to be patient. And if this plays out, then we're looking for a move back to the buy side liquidity, pretty much this general zone in the short term. So back to about 97 to 89, and then eventually lead to continuation, because I do think the ultimate level where we're going to see price get to and then probably reject and have a significantly hard time to get through is going to be about $1.20, right? That key monthly level, the buy side liquidity up here, we have about equal highs up here. It's a big fair value gap here on the monthly that got wicked through, didn't get traded, didn't get closed through. So there's could be a lot of supply up here. All right, so this is where I ultimately see it getting to. Where will I exit? I'll see how price action looks as we get towards the buy side liquidity up here. But if the price action looks good, if our weight in our portfolio is still stable, we're not, we don't have too many positions open or anything, and I don't feel like the need to trim, I'll definitely keep this going. So in case you aren't aware, you may see target $1.50. I rarely ever hold until my take profits here. It's because I'm swing trading, and my portfolio weight takes precedence over almost everything, right? So if I have too much open at any given time for what I foresee happening in the next month or two, I will look to trim. If I think I have too little, I'll look to add. So it's like it's kind of like a measuring game rather than just a trading game, trading setup. So it's a little bit more complicated. But if you are interested in learning about that, make sure to join Discord, and it's the best way to get in contact with me to ask me questions about that sort of thing. And also, if you are interested in those services I've been mentioning, mainly the swing trade service, you'll find the link down below. I also run a day trade room. We trade Forex, crypto, pretty much every day, Monday through Friday. New York open, so it's about 8:30 to 8:45 a.m. to about, sometimes we'll go until 11 a.m., but I mean, today we went all the way up until like 2 p.m. Eastern time, so sometimes we'll be in there for quite a while, depending on what the markets are kind of giving us. So if you're interested in day trading with us, make sure to check out the details on that. You'll find all that in the Discord and Patreon as well. All right, guys, that is it for the recap. Again, if you have any questions, leave a comment down below or join the Discord. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.